Right now, we are live at 6 o'clock again on July 20th, and the countdown clock is not running fast enough till our launch on Monday. I really would like to have that happen pretty quickly. We're all chomping at the bit for launch day. I'm letting this document here just soak into the recording. You all know what that is. And so that is that. Now I'm going to stop share for a moment and just talk to you a little bit about some of the things that are happening. I saw in the chat someone asking what's happening with DWAC. Well, news just broke about 3 to 4 minutes ago about what had happened after the market had closed, and the SEC settled in their lawsuit against the SPAC, Special Acquisition Company, DWAC. So the stock is up. We'll look at that in a little bit. But I want to just, for the record, I want to clear some things up. I can't even explain what's happening really because get a lot of people confused. Saw that there was an alert that came out on Disney through the other publisher there, and had my name on it, and it wasn't me. I did not put any alerts out. I am not putting any alerts out. Moving forward here, I'm 100% StickyTrades.com. We are a separate company. That does not mean we're not going to be working with anyone else. In fact, I am in the process of submitting an agreement over to Pete. Notice how I'm using first names only. I just don't want to violate anyone's privacy on a public forum here, but things are looking good for the future here, at least Sticky Trades. And I'm going to show you some of the things that we're doing. All right, now I'm going to share my screen here, my entire screen right now, and get rid of this document. Now here is the Qs. And for those of you who tuned in to my midweek report, you'll know that I still kept the downside targets here. Now, this is a pretty significant lift in volume here today. I would say a little bit more than pretty significant. It's a very significant development there. But notice what's happening above this candle. See, there's still a gap there. So what happens when there's a gap above and below the market? Well, what usually happens is it catches the market more or less in a sideways range until these gaps start to fill. Give us a little more drawing room here. So we have a gap here, minor, but we have a much bigger gap here, and that's where my price target is. And we have a gap above the market. So we could see the Qs just kind of drift sideways for a little while in this range before going lower. Ultimately, many of you know I hold a fairly significant and strong bearish, I guess you could say, bias. People question that all the time, and I'm okay with that because what I'm catering to right now, who I'm catering to, are swing traders, not day traders. And I'm not catering to investors, although investors can do very well with us over time if they know how to use or incorporate options into their portfolios. But you can imagine that the trolls out there love it when I miss targets. But I'm not going to capitulate on the longer term outlook. And here's why. I'll show you. I'm going to support this again with documentation of what I have as far as price patterns. Let me move this on over here. I love these little icons that pop up. That's brand new to us. So, if you like or dislike what I'm saying, go right ahead. Express your feelings here. I'm okay with that. From New York, I got pretty tough skin. I can take constructive criticism. Now, looking at this double top pattern, I started showing this the other night. This is what a double top, or AKA M top, looks like. Right, you normally get an extreme left side of the pattern and then a pullback. So where are we right now? We're about 3/4 of the way from this M top actually forming. So here we have the extreme up move, and then the end of the bull market, as I called it here. Then we had the sell off here, and now we have a rally. Now, what I find most interesting is that while this isn't exactly at that high, I find it very interesting to see that long shadow on the monthly candle, because you generally see those on M tops. You see these long shadows. You see that? And for those of you that have been following along with my alerts and videos and educational content, and if you read my books, you'll know that I pay very close attention to those shadows. Now, look, it's hard to see that right there, but there was a shooting star right there. Here is a shooting star right there. Here is a shooting star right here. And again, we have a shooting star long shadow up here. Now, I'm giving all credit for this example to dailypriceaction.com, right? They came up with that image in 2014, but I want to give them credit because it's their image, right? So I want to do that for them and maybe even expose them. I don't know who they are, or I haven't been to their website, but I see that down at the bottom. Now, for all of you who have been short the market and have been, I will say, suffering some angst here with this rally. Well, I again have told you all that I'm not changing my long-term targets. The timeline obviously has been extended. There's no question about that. But I'm looking at these lows here. And you might say, well, that's pretty darn far down the road down there, AJ. Well, yeah, well, watch. I'll show you how I come up with that and why I continue to hold it. Look to my left here, and the bottom of the M, which for an M top pattern, that's called the neckline, just like a head and shoulders top, even though the term neckline fits better with the head and shoulders, obviously, because you have the neckline here. But for the M top, they call it a neckline as well. So there's your neckline. If we come down, and I think we will at least test the bottom of that neckline, the bottom of the M, that's a pretty significant move right there. And I was talking to Vicky, who's one of our coaching clients, and she's asking, do you think 320 is still too far out of the money for us to be working those options? Well, no, because if you look at where the moving average is on the monthly chart, that's just the moving average at 320. So can the Qs pull back 56 points from here and get back to the moving average? I see that as being a very reasonable target. Now, if it goes to the bottom of the M and breaks out below that neckline, you take the measurement from the neckline to the top of the M and you attach that to the breakout point. There we go. See, that brings us very, very close to the March 2020 lows. So this is not me holding on to my opinion. This is me looking at the charts and interpreting the charts for how I read the charts. And pattern recognition is extremely important. Now, understand we have Nod in the room right now. He is monitoring questions and chat. He's helping out because we got a lot of folks coming in. And the chat box, by the way, how many of you are brand new? Because this week is open to the public, but this is the last week we're having open to the public sessions. How many of you with a Y, or you could hit your little hand there down there and raise your hand on the emojis there. All right, we're people that are brand new to the public. All right, so enjoy this one. Next week, it is going to be a members only webinar because that's what our members pay for as we open up our new website. And so this is very exciting to see brand new people coming in. Now, with that, before I get into the other content that I want to talk about, I'm going to bring up something that many of you don't even know about or have never seen. And here it is. First, let me qualify this to let you know that this is not percentages of return. This is not an income claim or a guarantee of making profits. This is a record of the percentage of accuracy since I started my equity service in 2010. All right, that's what this is. Now, each and every year at the end of each year, I calculate the hit rate. In other words, if I put out, okay, bullish signal here and the stock goes up before getting stopped out, that counts as a win. And so this is a percentage of the stocks that had gone up after we saw buy signals, or a percentage of stocks that had gone down after a sell signal. Now, this 87.95% is right in line with what we're getting on the Wednesday call, right? Peter says, is that star favorites only? No, these are the actual alerts or publications that had gone out from me. These are the ones that I put out to the members. Now, I'm going very slow here because I want to make sure no one misinterprets what I'm saying. This 87.95% is very, very close to the percentage of accuracy that's being tracked by our volunteer members on the Wednesday call. And I'm going to go over that with you as well, because this is the open to the public session. All right. Now, that 87.95% is not including this year's percentage, which is currently tracking year to date 82.14%. Why? Because we haven't finished this year. But if I hold that, or if it goes higher, obviously it could happen, it could go higher, then this number will be calculated into this average, 12-year average, which will be a 13-year average. And obviously the 87.95% is probably going to go up over 88%. If you could do your math, you can figure that out just by looking at. Now let's go to the blotter. This is, now you can see, I've been doing this for 13 years. This spreadsheet is 13 years old. And I do this every time I put out an alert. I put it on my trade blotter with the date, the stock, the bias, if it's bullish or bearish, the closing price when that publication went out, and then the trailing 3-month price action. You see that? The very first one of this year was GRWG. Bought that at 432. What happened? You can go back and look at your charts. If you like to go back and pause this recording and go check this, that's fine, right? Now, the outcome was positive. Now, this obviously is not going to be 100%. You're going to be wrong when you're trading. The key is when you are wrong, like SOXS wrong in January, right? That turned out to be negative and got stopped out. What does that mean when, not if, but when the stock goes against you? Well, each one of my publications has recorded within it, and many of you know this already, but this is for the new folks, have recorded within it the 1% rule for how to A, size the position, and B, how to calculate the get out point so that you're not suffering a catastrophic loss when you're wrong. You see, what I'm getting at here is, if right now we're tracking 82.14% accuracy, you could still lose money with a track record like that. Because if you got too heavily involved with SQQQ back in April, and let's say you took all of your cash available and put it in SQQQ, which some of you may have done, I don't know, I can't trade for you, you could lose at the end of the year, or worse. Accuracy and still lose money at the end of the year if you don't know how to manage risk. Now, if you look at what's happened since, let's say, May, right, middle of May, this one, we got into JPI, the stock went up. JNUG, it went up. All these RW, actually, yeah, this one went up very briefly, and then the shooting star showed up on July 6th. At that point, it was game over. Sell signals showed up. See how I have my notes? Now, why am I showing you this blotter? Because if all you're going to do is trade equities, I would strongly suggest that you keep a record of your trades so that you can go back and check to see if your percentage of accuracy is in line or even close to what I'm showing you here. Now, what I tell people all the time is when you're looking at the charts, please do yourself a big favor and that you go and you look at random charts. Here, I'll show you what I'm talking about here. If I go into my watch list here, what I tell people to do is set up a watch list of stocks. I'm scrolling on the left here, right? Go randomly and every day look at 20 stocks. Right there, that would be a sell signal. This one is going down. I wouldn't be buying it. The volume is going up on the way down. This one, AMD, hit my target from going up. AMR, stock is getting a little overextended. See, and what you do is you go in and you look at these ticker symbols every day by setting up a watch list and then going into the chart and looking for signals that are bullish or bearish. Let me just show you. This is ATVI. Look at the bullish hammer right at the bottom. Look at this inverted hammer. That's bullish inverted hammer. Look at the bearish engulfing here. Look at the bearish harami here. You see that? Look at, let me see if I can find another one. See any other signals? I'm looking for bullish signals. I'll go to the next one. Watch. So that one. So let's say Monday is your bullish engulfing Monday. You're going to go and you're going to look at the charts and look for every bullish engulfing candle you could find on the chart. There's a bullish engulfing. There's a bullish harami right there. Where's another bullish? Here's a bullish harami. Hard to see, but that body falls right in the red. See? And then Tuesday, what do? You take your charts, you go look for hammer. Hammer Tuesday. There's a hammer. There's a hammer. Bullish, by the way. Bullish hammer. Go find some. There's another one buried in there. There's a bullish hammer. What is a hammer? A hammer is a small body candle with a long shadow underneath that is found at the end of a downward leg. That's a hammer. And there's one right there. There's one right there. You see? Wednesday, what do? I don't know. Let's have fun. Let's change it up a little bit. Maybe look for some bearish signals. And let's go to the next stock. Let's see. Any bearish signals here? Oh, look at that. Bearish engulfing yesterday. Bearish engulfing right there. Shooting star, opposite of a hammer. What is a shooting star? It's a candle found at the end of an upward leg that has a shadow above it that is 1.5 to 2 times the length of the body. That's bearish. And look what happened after that. Went down. There's another shooting star right there. What happened after that? 2 days later, stock got smushed, right? Go to the next stock and look for bearish candles. What do on Thursday? Well, how about we do gap recognition Thursday? Keep going down your list. I mean, randomly. I'm not talking about trading. But look for gaps. Here's a gap. There's a gap. There's a gap. Look for another stock. Look for gaps. Well, here's an interesting one because here's a gap. You see that? There's a little tiny gap there, but it's still a gap. Here is a gap. I don't know if you can see it at the top. So what is the significance of a gap? There's another little gap. Some of you already know this, but I'm repeating for the benefit of those who've never heard my voice before. 80% of the time, gaps fill. Look, to the left and going right. It filled. It filled. It filled. Look, there's a little gap. It filled. This little gap here filled just last week or early this week. 80% of the time, gaps fill. So if you know there's a gap below the market, you may not want to get so aggressive in buying a stock. If you see a gap above the market and the stock is trading below that gap, and you know there's an 80% chance the gap could fill, that could give you some ideas on whether or not to buy or sell. But here's the other rule about gaps. 80% of the time after gaps fill, prices do what? Some of the members know that, probably typing it in the chat already. I don't even see. I can't keep the chat open. Yeah, they reverse. Exactly. Diana, you're absolutely right. I repeat, I teach through repetition over and over and over again. So 80% is not 100%, right? Well, here's going back. Look, 80% of the time gaps fill. It filled. Then what happened right after it filled? It reversed and went down. See? Here's a gap right here. 80% of the time gaps fill. What happened after it filled? It reversed. You see that? Here's a gap up here. Same gap. What happened? 80% of the time gaps fill. What happened after it filled? It reversed and went up. This is, folks, let me just tell you something. Hold on. Let me turn my charts off for a second. Can you understand why sometimes I might lose sleep at night? Can some of you understand why sometimes I might lose sleep at night? Because, and I'm not joking about this, my partners know this very well. I literally wake up in the morning, clap my hands, thank Almighty God that I woke up this morning, and I can't wait to talk to you, or I can't wait to build a video that teaches you, or I can't wait to get a publication out that's going to help you. I can't wait to have a heart-to-heart talk about how important it is to manage risk. I literally cannot wake up not being excited. I wake up excited every morning. Ask my wife. One day you'll see my wife. I'll try to bring her in. She will not want to get on a video with me right now till everything's all done up right? But I'm telling you, I've known my wife since she was 15 years old. She and I dated in high school. I've known her since she was 15 years old. She's known me since I was 18 years old. Ask her if I don't wake up in the morning clapping my hands and thanking God. I do every morning. Now, I'm not going to get all spiritual and religious on you here. Don't get me wrong. I want you to be excited about tomorrow, not stressed out about tomorrow. I want you to wake up in the morning and say, man, I can't wait. I can't wait to live my life, do good things, learn how to make money, and then go do good things with the money. Okay? That's what I am looking forward to and why I get so excited about teaching you. Now, I'm going to show you something else that very few people get a chance to see in the public. Yesterday, let me show you this little document. Hopefully you can see this. This is my hand scratched notes. Let me see that. Can you see that? These are 18 stocks that we labeled last night as star favorites. Star favorites are stocks that follow along with my trading checklist. See, I look for buy signals and sell signals. If the overwhelming evidence is showing buy, it shows up as a star favorite on the buy side. If the overwhelming evidence shows up sell, all the way down my trading checklist, then that's a star favorite to the downside. I'm not going to give you my targets. I'm just going to show you my zip lines. Ready? I'm going to do this very quickly. First one, and I'm going to do a shout out for the people that suggested or brought these stocks, ticker symbols to me yesterday and beyond. AMD, look at that. Hit my downside target. This is unbelievable. Look at that. We did a two-part forecast. Went up, hit my upside, went down, hit the downside. I'm just doing this quickly. That was Brunel's. Look at GIS. Now this was Gino's. Look at this. We have an upside target. Look what happened today. It's on its way. It's on its way up to hitting that target, right? See that? These are zip lines. These are more or less angles that I look for with the end of the line being my target. So if you see one of my charts with one of those lines, know that the end of the line is going to be my target. Now look at BIDU. Look, what did I say? I said it would go up, then go down, then go up again. Check that out. What did it do? It went up, it went down, hit my targets, by the way, and it's now starting to go up again. This is a very small green candle, almost very, very close to an inverted hammer. What's an inverted hammer? That's an inverted hammer. Very close, long shadow. So inverted hammer looks like this. It could have a little shadow underneath the bottom. It looks like this at the end of a downward leg. That is bullish. So if I see that on a trading checklist and I'm calculating that, that counts as a buy signal or a bullish signal. You see that? Look at Baidu. Look at W. This is on its way to pivoting lower. That was Nancy's stock. Look at RMBS. Look at this. Now, we just went over these last night. Look at this. This one already hit my downside target. And what do we have now? A hammer. We hit the downside target, hit support. Now we have a hammer. Draw your own conclusions from that chart, but understand, look to the left and you'll see target hit, downside target hit, downside target hit, downside target hit. Right? Now, if I were short this stock and I see a hammer in the chat box, what would you do if you were short this stock? Would you just rub your hands together and say, I'm going to squeeze out a couple more pennies tomorrow, right? Yeah, you cover. Look at all the answers coming in that chat box. Now, for those of you that are watching the recording, you don't see what I see right now. You don't see that chat box just rolling away right there, right? The people that I am working with through video and our website and one-on-one coaching and all that good stuff, the repetition is paying off. If you hear me or watch me identify a pattern, like a hammer pattern, and then you say, wow, look at that hammer. What happened? It went up. Look at that hammer. Oh, can it go up? Yeah, it could go up. Look at this hammer after a bullish engulfing candle right there. Look, it went up. That's not a guarantee. It's a high probability signal that no one on CNBC or Fox or anywhere else is going to take time to explain to you. Why? They're really good financial talk show hosts. They're not technicians. They're not technicians. I did my stint on television through PBS, and I will tell you, PBS is the most boring type of format imaginable. I couldn't do anything live like this. I had to do everything recorded. We had to submit questions before we asked the questions. It was, listen, PBS, I thank them for my launch, actually, but I could never go back to PBS because I'm on a whole different level of energy right now. I talk about a hammer pattern. There you go. Now, here we go. Keep going. XOM, look at this. This one was Mark's target. Check that out. Did it hit the target? I don't know. 103.75. What's today's high? 103.66, 9 cents off. Boom. 9 cents off. Tomorrow it might hit. Who knows? Let's go another one. Apple. This was Rob J's. Dr. Rob. AAPL. What did we say? I said Apple will go down. Look what we got there, folks. Let me zoom in. Look at that. You've got a bearish harami almost. Let me see. Hold on. Make sure. Does that red body fall within the green body? I think so. By a penny. Yes. That's a bearish candle. Look at the sell signal down below. Good chance that by next week that target's going to hit. Then guess what? Our scorekeepers mark it, and then they share the Google share document, which they do, by the way. Definitely worth your time to go on Monday because the members share with the other members, and they trade, and they talk, and they create a community. That's what we're doing. Sticky Trades is about moving forward. By the way, got to calm down now. All right, throttle back, throttle back. We are all about creating a community of people who are like-minded and willing to learn together. I encourage all of you, if you meet on a social media platform, let's say you're all asking questions on one of my posts, get to know each other, please. This isn't like we're keeping your names top secret from the world. Bond with each other. Learn from each other. If you have to cry with each other, but make sure you're all helping each other manage risk as well, right? That's what this is all about. So Apple looks good. Look at MU. This one was brought to us by Grimmy. Look at that. I had upside hit, and then I said I'm keeping the downside. It looks like there's a shooting star there. Remember where the shooting star is? It's found at the end of an upward leg when you have a long shadow and a small body candle. If this whole thing was found at the end of a bottom leg, down leg rather, it would be bullish, but it's closer to the top. So it's bearish. See that? All right, that was MU. AMAT. Did this one hit already? I think this one hit already. Yeah, check this out. This is like, again, I said this last night, but it's so important that you understand. I am not trying to boast or brag about how great the targets are. I'm not trying to impress the whole world that, over 80% is achievable with your percentage of equity. I'm showing you the evidence so that you all could do this eventually on your own, and you won't need me to do this for you. See, that's the whole thing. Teach, we teach, you learn well enough, go teach more people. Then guess what happens? This is the power of what we are doing. This little green candle right there. Watch, I'll show you through the repetition here. Those existing members who are on with me right now, who could tell me what that candle is right there? Look at that. Mike, Tim, you're absolutely right. And there's probably others. Yep, look at Matesh. Look at that. It's a hanging man. Look at Edward. Look at John. It's a hanging man. I didn't give any clues. All I did was draw an arrow. And look at how many people simultaneously, almost to right there, right? There we got a hammer, a hanging man at the top. I don't see a bullish harami anywhere up here. There's no bullish harami. None. There's nothing bullish at the top there. That's a bearish candle. Now, what happened? Boom, the stock gapped down. My forecast was last week it would go up and then come down. Guess what it did? It went up and came down. Now that the target is hit, what would you say? Here's the thing. For those of you that took a short position, right? What would you say about that chart right now? Go ahead, throw it out there. Bounce back up to fill the gap. Mike is right eventually, but what's happening down below down here? Volume is increasing on the way down. Stochastic is crossing with a sell signal. Oh, price closed below that support level. Ooh. Now, here's one of the little tips I'll give you. Excuse me. Knowing when not to buy a stock is more important than knowing when to buy a stock. I'm not saying that it's not going to go up and fill the gap. But when the volume is up like that, and I alluded to this yesterday, that volume is like the gas pedal. Think of the gas pedal and then put the gas pedal in line with the color code of the candle. So if red means sell or sellers are in control and they're pushing hard on the gas, do you want to go buy that stock when the sellers are pedal to the metal? No. I mean, that should make some common sense, even if you don't know anything about charts. Understand how money flows through the system, right? Understand how trends are affected by money flow. So if volume suggests that pressure is being put on the price by the sellers, then at least wait for the pressure to subside before you even think about or consider buying a stock. Remember, knowing when not to buy a stock is more important than knowing when to buy a stock. Now, I don't want to spend too much time. I'm almost through this list here. But look at IGV. Jay-Z put this one out. Check this one out. Yesterday, remember, yesterday, this candle was not here. I'm going to erase that. See? Yesterday, that candle was not there. So what evidence did I have yesterday that brought me or drew me to the conclusion that it would go down? No, it's not a spinning top. That's remember, 1.5 times the length of the body is the shadow. That is another shooting star. See, and the shooting star showed up on a drop in volume on the green. Now, let me pause here for a second. When you see the volume dropping on a green candle as the stock is going up, boom, remember that gas pedal, right? The buyers who are wearing the green jerseys are easing up on the gas. They're not hitting the brakes, mind you. They're just easing up on the gas, which means that the buyers are slowing down. And when the buyers slow down, those who are thinking about selling pick up on that clue and they say, oh, the buyers are slowing down. Therefore, if I'm thinking about selling, I better sell now. And then the very next day, what happened? The very next day, the sellers came in, and that's why I drew that line. Again, with no evidence here other than the volume and the candle. And then what happened? Boom. it hit the target very next day. Now I don't know. I don't know if I don't know if who's on. I don't know if Jay-Z is on here. John, are you on here? John, if you're on here, I don't know who's got what subscriptions, so I can't tell you, but I know we have a very popular crowd here. All right. So anyway, so hopefully, John took action against that signal yesterday. All right, moving along right here. So I'm going from IGV. Now Paul put FTNT. This was Paul's candidate, and what happened? Look at that. It's very very similar to the last one. Now, I'm reviewing this again. This is what you all should be doing with your own charts. Remember, for those who are brand new, please understand me. If you follow me here on StickyTrades.com, or you follow my YouTube channel, which is StickyTrades plural video, all one word, StickyTrades video. Not if you could please put that in the chat box for everyone to bookmark. And when Nod puts that StickyTrades video, there it is. Look at that. Tim beat Nod to it. Check it out. Thank you, Tim. Go there and please hit the notification bell so that tomorrow when I produce the video, it's going to be going out Saturday morning. You'll know when it's there and you could go look at it. So what you want to do is, again, through repetition, just look at the markets. Now let's stage this again. Let's block this out, okay? I'm blocking that red candle out. There it is. Make believe that's not there, okay? And let's rewind to where I was yesterday. Read the charts to me. What do you, oh, there we go. Read the charts to me. What do you see? Bearish engulfing, absolutely. Rick got that one and Tim got that one first. But what happened before the bearish engulfing? See this candle? A hanging man. You got it, Mike. Mike Robinson in the house. Yeah. Now, what happened before the bearish hanging man? Oh, look at that down below. Can you see that? Remember the volume discussion we just had? Price goes up here. Look, we have a bullish. There we go. We have a bullish Harami followed by, oh, look at that, a shooting star. But what happened after the shooting star? Lower volume. Buyers are coming in here. We know that. And then after that, hanging man, followed by bearish engulfing. Hence the reason why the target was put down below and boom, hit the target the very next day. Now that doesn't look like much, does it? But the stock was down quite significantly today, percentage-wise, down, a dollar, actually 1.25%. Now, for the option traders, you might think, oh, that's not a big deal. It's not down that much. Yeah, but for option trades, you can make a lot of money leverage-wise if you're buying some out-of-the-money options and you're looking at bearish engulfing candles. Let me just say this. Here we go. I got to settle down. StickyTrades is working on a partnership, affiliate partnership with Trade Ideas. I'm letting the cat out of the bag. And Trade Ideas has an algorithm that's a bot, it's AI, that I will be working with their bot. They've named the bot Holly, right? So I'll be working with Holly to generate more signals. Now, if you think 82% accuracy is good on the equity, what do you think is going to happen if we throw some algorithms in there? Again, I don't know. I could tell you I think the percentages are going to go up. But I don't know yet because no one's done this. No one in the world has taken my trading checklist and matched it with the algorithms, with the AI. No one's done that yet. I mean, I'm sure someone out there is building algorithms that are going to try to be picking stocks, but no one has matched that up with my trading checklist. Why? Because it's proprietary. I haven't given permission for anyone to do that, but we're going to be doing that, right? All right, let's go. I got to go through this because I have more. BKNG was brought to us by John. Let me see, BKNG. Now, understand something. John is one of our VIP members, and John and I had a little bit of a quick talk because the VIPs actually get my cell phone, and we have intraday market hour talk, right? Anyway, John asked me a question. He said, "Listen, are you going to end the webinar exactly at 7 o'clock? And I said, yeah, I'm going to end it exactly at 7 o'clock. Why? He goes, because my wife Maureen is going to make sure that the barbecue is ready. So as soon as I get off this call, I'm going to start the barbecue up. So we're going to end exactly at 7 o'clock for John and Maureen. Okay, that we're going to do that. So I don't want to mess up their barbecue. But this was John's pick. Now look, yesterday we had a pretty significant bearish candle here that was almost a bearish engulfing. But what happened here is that booking closed below the fan line. I'll get to that in another webinar, but that's why I went down. Now, the very next day, today, what do we have? A shooting star. Shooting stars don't always show up right at the exact high, and hammers don't always show up at the end of exact low, but they show up within close proximity, usually one day before or one day after. This shooting star showed up today. And so we were right on that, and we still have a little bit more downside on that. And that's a big move on booking because that was down over $10 today. Excuse me, that was down over $10 today, right? So for those option traders that listened to me on Monday when I was talking about buying put spreads, in the money put spreads, you're probably already making money, aren't? Tim, did you do that? Did you buy any in the money put spreads? Yeah, baby, there you go. Take that profit and do good things with it. I'm not talking about going buying a new car. Go do good things with that money. Go change the world with that money. All right, next one. BKNG coin. Now watch this one. This one came up by Alan. This is unbelievable, folks. This was very close. We're more than halfway over my target. Now, what I said here is I used the 23.6 Fibonacci retracements. Now, right now, I'm in the process of producing an educational video on how to use Fibonacci calculators. I'm in the process of producing that. So tomorrow I will have the video complete. It will be pushed to our educational page for our members, and you will know how to use the Fibonacci retracement and the calculator. Well, we're very close to hitting that. And I think tomorrow coin could actually hit it, believe it or not. It could hit it tomorrow. All right, next one is Google. What happened with Google today? I don't know about this one. This was Randy. Oh, bam! Look at that, hits the target. Now notice what I'm doing here. I'm showing you how the targets are hitting, but next Wednesday, I will be giving the new forecast for the members on Wednesday. You see? And by the way, Wednesday is the most popular webinar that I do during the week. It's right smack dab in the middle of the week. People are throwing ticker symbols out at me. I'm doing 40, maybe 50 stocks in an hour, and I'm drawing my zip lines for everyone. Look, see, target back here, hit. Target right here, hit. See, I want you to learn how to do that. Yeah, gap fill tomorrow. Possibly it could go all the way down there. That's Google. All right, now Costco. Tim had Costco. What happened with Costco? Oh, look at that. Look at that. Incredible. We have a shooting star today after I put a downside target on that one at 456. Excuse me, 546. A little dyslexia there. So I couldn't have asked for a better candle today. A shooting star. It's bearish. Look down below. Look at the oscillators. You see that? Now this Thursday call is normally just for equity traders, mind you. I'm not talking a whole lot of options here. That's Monday call. I talk about options and how people could do that. Look at INTU. Look at that, on its way. You know what I find most fascinating about this one, folks, is that a lot of times, not all, but a lot of times the price follows the angle at which I draw these lines. A lot of times, not all, but a lot of times, as you're seeing right now. So INTU is on its way to hit that downside target. And look today what happened. It crossed, the CCI down there crossed with the sell signal. That's beautiful. I couldn't have asked for a better signal today as a follow through. FAZ, this one came up by Screaming Chicken. That's a code name. That's I don't know who that person's real name is, but Screaming Chicken comes on. Now this one, I put an upside target and it has not pivoted yet, but look folks, look what we see here. See the drop in volume? The drop in volume is telling us what? The sellers are pulling their foot off the gas pedal, right? They're slowing down on the pressure. So I think that one could very well rally. I don't know if it's going to hit my target by next week, but it could very well make the pivot point before then. Now, here's one of my favorites is Schwab. Look at that. Now, this one is interesting, and I will even say confusing, because we have a massive drop in volume, but, that might get in the way of my downside target. Could it? That's a bullish engulfing. However, I'm not really worried about that one. You know why? Because this is in the banking sector. What's happening next week with the Fed? What's happening with the Fed next week? Yeah, rate announcements. Doesn't matter if they go 25 basis points or 50 basis points, a rate hike is going to hurt all banks because they're locked in the long-term bond portfolio that they can't get out of without taking a loss. So the credit crunch will still be on for the banks, right? So what's happening here is this could, I'm just putting a big question mark on this. Remember I said that bullish and bearish engulfing candles are right 80% of the time. This could be one of the 20% time it does not make it up. We'll have to see. That's a big one. That's a big one. All right, now that is what we did yesterday. Now, what I want to do is I want to take some Q&A, some questions. Do we have any questions there? Look at that. No questions coming in? Unless they're already, oh, there they are. Look at Nod going to town, answering all these questions. Wow, wow. All right, so looks like Fred wants me to look at NVIDIA. All right, so I'm giving this away, but this is only for one more day. Nod, could you or will you be able to put in the publication blotter into the chat box? Can you put that in there? Is it possible? This is only going to be visible for one more day, tomorrow, to the public. Then it goes to members only. All right, let me see if I can find it here. Let me pull it up here. I think I have it bookmarked. I should have it bookmarked. All right, so here we go. I want to show someone put NVIDIA. Now, I'm going to do a shout out to Kelly because Kelly and I had a nice talk today, and Kelly's birthday is today, so happy birthday, Kelly, again. In this video, in this trade alert and publication that I have here, I do mention Kelly and wish her a happy birthday. That's the first time, Kelly, that I've ever wished anyone a happy birthday on one of our alerts. So you're forever and always archived in the interwebby forever and ever. All right. So what I did is, after talking with Kelly, she had talked about this stock, and I already had it on my watch list. NVDS is the ETF that goes inversely to NVIDIA. So we took a long call position on that, which means I think NVIDIA is going to drop. And if NVIDIA drops, this one goes up, right? So that's kind of like a prelude to what I'm going to talk about on NVIDIA. What happened with NVIDIA? Well, look at this. I had a downside target on that one. This did not come up as a star favorite yesterday, but I still did the forecast. I had a lot of star favorites, so I had to limit it. What happened yesterday? Look at the record from yesterday. Bearish Harami. What is a bearish Harami? It's very simple. A bearish Harami is when you have a green body candle. I'm just going body to body now. Forget the shadows for a moment. A green body candle that has a smaller red body that falls within the body of the previous green candle. That is as bearish as a bearish engulfing. And that's what happened yesterday. That's why I went down. And what happened? Boom, hit the target very next day. Now I think that NVIDIA could keep going down. Why? Because there's a gap down below the market, and look at the gas pedal. All right, I did that intentionally. I didn't slip. I told you about the gas pedal. The bears are pushing on the gas. And look down below, there's a sell signal. When the blue line crosses below the red line, I'll expand that for you a little bit so you can see it more clearly. All right, I'm looking at the clock. We got 10 minutes left before the barbecue starts. Hold on. All right, let's go down here. All right, so you see that that blue line, that's the CCI. When that crosses below that over there. All right, now I'm going downside on that again because of the bearish harami, but there's still an open gap down there. Remember what I said about the open gap down there, right? 80% of the time those gaps fill. Now, if it does fill and you're short in any possible way, or you're long the inversely related ETF, that might be a signal for you to go ahead and close the position. Okay. All right. So now, folks, I just want to mention something about the chat box. We keep that civil, and I use the chat box to interact with the audience. That's my only, I guess you could say, my line of communication to you. Now, forgive me for blowing my top on that, but I value that chat box so much because it's my connection to you. And I know sometimes there's cross conversations that get in there and they get heated and even political at sometimes. And we just want to kind of set that stage and make sure that that tool is available for everyone as we move forward. Okay. So all is good. And that's good. All right. So that question came up about NVIDIA. All right, now, one other thing about the pattern recognition, and I want to talk about this with silver, and I'm going to end with silver, okay? I had told everyone about my position, and yesterday, silver came within 1 penny of filling the gap right there, 1 penny. I'm counting that as a gap fill within 1 penny, or it actually came within less than 1 penny because silver trades in fractions of a penny, right? So it came, I'm counting it as a gap fill. But look what happened in silver. Remember what I say about gaps, 80% of the time gaps fill, and then what happens after they fill, 80% of the time it drops. But I want to focus this. This is incredible because rarely, I think once out of 1,000 charts, you'll see this happening. And what do we have? That is a bearish engulfing. That is not just engulfing one previous green candle, not 2 previous green candles, not 3 previous green candles. It's engulfing 4 previous green candles. I very, very rarely see that, but when you do, and I have this in my presentation on candle patterns, I have one that's going out to our members. The 4 favorite candle patterns, bearish and bullish engulfing candles are one of them. Rarely, if at all, will you ever in your life even see that happen. Now, needless to say, that's extremely bearish. Now, I am out of 15% of my position. I'm still in 85%, but I was so close of selling out of another 10%, but I committed to myself that I did not want to be that far out of silver. I'm parlaying this, and I show everyone how I do this, even on the weekly market reports. I'm showing everyone even what I'm doing ahead of time. So look at the volume. Gas pedal is being pressed by the bears. Open gaps down here. Now, not if, but when silver starts dropping here or maybe even lower, I'm taking the money that I generated from all my sales, and I'm telling you right now that I'm going to be a buyer in this area here, right? I'm telling you ahead of time so that if you want to buy ahead of me, go ahead. And I'm not telling you how to trade, but I'm giving you the signals that I'll be looking for to get back into the position. Now, when I buy back that position, I will now have more silver in my portfolio than ever before, because whenever I sell high and buy lower, I'm accumulating more shares. And each time I accumulate more shares, I'm gathering more of, or a larger position, you see? And so that is something to look at. And again, if you follow my trading checklist, look right there at the stochastic. The stochastic is crossing, or in the process of crossing, with a sell signal, and the CCI is crossed already with a sell signal. Now, this is why I am going with, I always tell people the CCI is my favorite oscillator, because look what's happened. the CCI gave the sell signal yesterday, a full day before the stochastic is giving the sell signal. You see that? And look at the left. Look when the CCI gave the buy signal here, when it crossed over the green line, there's the buy signal. That was a clear, 5 days before, maybe more than 5 days before the stochastic gave the buy signal. So you see how the CCI leads with the signals? Not always. Again, that always is a big word, right? Always and never. Very, very big words. But I'm showing you the evidence so that you know what to look for and put that in your notepad when if you're building your own trading journal, let's say, and that's another thing I teach our students is how to not only record your trades, but put notes on the trades and even explanations as to why you are buying or selling that stock at that particular position, right? So this is a really good example of how to trade, because silver is one of the more manipulated commodities out there. I served for 2 years as the chairman of the option floor trading committee for COMEX. And so I know the ins and outs of silver very well. And an insider turned outsider looking back inside, I'm telling you, there is tons of manipulation that is going on. And we're going to be working this into our AI as we develop moving forward, because I'm giving you a little secret here, but we're going to be working the delivery notices into the AI program to show how much COMEX is going to be short, or how much silver they're going to have to deliver just prior to the delivery date or expiration date. And then we're going to couple that up or marry that to the technical signals. So silver and gold, but mainly silver, is going to be one of the most popular in and out swing trade candidates that we'll be putting out based on my alerts. Now understand, this is one of the most traded ticker symbols that I have in my portfolio, and that's why I like making it public. And remember that if you go and look at CNBC, what happens is the guests on there, they show the ticker symbols that they like or they don't like, but guess what? They're already in the position when they're telling you that. You see where I'm going with that? I'm telling you when I'm going to be buying it or where I'm going to be buying it before I do that. So my goal is to put you ahead of my trade. I want you to get the full benefit of that. Now, finally, I see that popping up. Look at DWAC. DWAC was one we've traded in the past, but it closed at 1336. But look what happened after hours. Boom. It's up to 17, close to 17. That's because the SEC settled with them in the lawsuit, and the pressure is off on that one. You see that? So, Rob, thank you so much for a belated happy birthday. That was Saturday. And I couldn't think of a better birthday present than to be able to launch StickyTrades on Monday morning. Our entire team has got the jitterbugs. We can't wait to show you what we've been working on over the past couple of months. It's going to impress you. So in order to get that barbecue lit and get John and Maureen, eating their hot dogs there, we got to make sure that we end right on time. So thank you so much. This is being recorded. It's going to be posted. And then next week, it's going to be on the member page and archived for all and the rest of forever. So thank you so much. And I'll talk to you on the next alert or trade report, market report. Thank you so much. Take care.